But let us also welcome BP Singh of Pramerica Mutual Fund into the conversation, as we welcome Siddarth Bhamre of Angel and Shubham Agarwal. Good morning, gentlemen. Thank you very much for joining us. Shubham, let me start with you. First up, how do you treat the Nifty itself as well as the Bank Nifty? We saw that bigger dip coming for the Bank Nifty towards close of trade in particular, but both the indices, do you go short or do you avoid trading?
Hi, good morning, Lata. If you look at the structure of Nifty, very clearly we can see that the momentum has been falling down, and some of the studies that we conduct on Nifty, the first one is that we go and compare the relative strength of Nifty compared to the other global equities. We do see that the momentum has been coming down, and there is a very high possibility of a temporary rebound that we might see. So the upside is very capped to 150 to 200 points. A maximum of 84.50 is what we see based on a downward sloping channel that is formed, but on the downside even 8,000 or even lower is very much probable. So the reward to risk is not very favorable. Secondly, we do see a dual distribution where the Nifty is quoting at the right extreme within that momentum pattern. So multiple things are coinciding, suggesting that one should start taking profit, and on the downside 8,000 and lower is what we are expecting. If you look at Bank Nifty, yes, definitely that can be used as a shorting opportunity. 18,200 can be kept as a stop loss, and I see that falling to 16,600. So that's a call on Bank Nifty. And even if you look at most of the banking names, most of them are coming on the short side, like Yes Bank, Allahabad Bank, Andhra Bank, especially the mid-cap names which are showing continued movement on the downside.
Okay, well, another stock to add to the list of disappointing mid-caps today will be Aptech. The numbers are just out and the profits have been halved to 2.7 crores, and the income has also fallen for the company to about 37 odd crores. Numbers were just flashing for you on the screen, so you can expect that stock to be under quite a bit of pressure this morning as well. Well, let's start off with some of your stocks. Shubham, you have 3 sell calls and 1 buy call today. So let me take the lone buy call. It's Bosch. What kind of target price have you ascribed to that?
Yes, so we reiterate our buy on Bosch because if you look at the overall medium-term pattern, that's a larger scale consolidation that is happening there, and recently we have seen a continuation pattern also getting developed. So this correction that we have seen, that seems very temporary in nature, and we believe that this will be one of the stock which is very uncorrelated to what happens with the broader market. So with a short-term perspective, we believe that the momentum should continue in Bosch, and we are looking for a target of 24,000, and a stop loss for the same can be kept below the swing low, which is placed at 20,200.
Okay, that's on Bosch. Well, let me look at your myriad sell ideas, Shubham. You definitely have a negative view on the mid-cap stocks. Let's start with Just Dial.
Yes, so if you look at the pattern there, 1030, 1040 is the level from where we did see a long-term breakdown happening there. And recently, Just Dial is almost stuck around the same area, and we have seen a temporary consolidation happening there. So if you look at the movement that happened yesterday, there was some selling pressure which has led to a breakdown happening on the hourly chart. So we believe that this breakdown should see added momentum on the downside, and the target that we see on the downside is 910, which could emerge in the time frame of 2 to 3 weeks, and the stop loss for the same can be kept above the resistance, which is at 1042.
Okay, fair enough. So that's the word coming in on Just Dial. That's a sell call from Shubham. But Mr. Tulsian, one stock that you've picked up for us is DCB Bank. Very interesting the way some of these smaller private sector banks are panning out with their expansion plans. You wouldn't worry about the mere survival of these banks over the next couple of years?
See, Sonia, actually worry was at about 140, 150. If you recall, maybe a couple of months back or maybe 3 months back, stock touched its high of 150. See, actually I don't say that there has been sea change in this last couple of months. We may say that okay, entry of small bank, payment banks and all that can take away the big slice of deposit from these banks and all that, but that too could very well be foreseen at that point of time also. But at that time we were seeing many of the experts going very positive on these banks. Now stock has corrected to from 150 to 90. Maybe for whatever reason I may say that okay, the 150 branch expansion was too aggressive, then management toned it down to 24 over a period of 24 months. I don't take even this 24 months as sacrosanct. They will move as it progresses. Now, right now they have a branch network of 160 branches. Now come on the valuations. It is ruling at a price to book of 1.5. If I take FY16, EPS of close to about 6 rupees. Yes, there was a dip in the asset quality marginally, or maybe on the return on assets also from 1% to about sub 1%, 0.9 to be precise. So all these things have given a correction in the share price to about 90. Now what is a branch per, you have a market cap of 2,500 crore. That gives you a valuation per branch, it's quite cheap compared to any other this one. And against the older one, at one time it was 16-17 crore per branch. You can't have that kind of valuations, really sustaining for these banks for such a long time. So I think that the correction has taken place. Already the things are all in place. And apart from that, the focus on the retail banking, because what I liked about this bank is mainly focus on the retail banking, and that is going to be the mantra, because you have said that the competition, I'm not too worried that all these the mortality rate will be very high. There may be consolidation, yes, but those banks will not going to, because they have been developing, they are all high-tech banks and all that. So I am seeing the valuations broadly on the asset quality, broadly on the price to book, broadly on the earnings also. Even on a P multiple basis it is 15. If you have been giving a valuation of 22, 23 on a P basis, what was the logic of not buying now? So I think that stock has bottomed out. You have seen the under ownership, weak hands have exited. So I am expecting 108 rupees, maybe a rise of about 20% in next 3 months or so.
Okay. Well, I take your point on the valuation per branch, but personally, since I follow the sector, I am worried that competition is increasing by almost 50%. 45 banks will become 66 banks at the end of about 1 year or 18 months. So generally a thinning of margins can be expected for the whole sector. Though I take your point that probably DCB, by moving to face the competition, is perhaps better placed to face it.
See, Lata, again coming on that point only, when the insurance nationalized, there were 246 insurance companies. I'm talking 35 years back. Now today there are 50 insurance companies. So the pie has been growing, but number has reduced. So again, I'm not disputing on that. One can always, you have the argument, but my simple logic is, see, the sanity, the wisdom was prevailing in case of this stock 3 months back. We knew that this competition is going to hot up. Now do we take a general, what you call, pruning the valuation call on all the private sector banks? I don't think that that's the right way. So my point is that the stock has corrected from 150 to 90, and that is giving you an entry point. Now come on the valuation. You may say that, okay, even the 100, the valuation per branch has no correlation. If you go by the Federal Bank, South Indian Bank, Dhanlaxmi Bank, they all are ruling at a valuation of 1 to 4 crore per branch, or maybe 5 crore per branch. That may not be the criteria. But what my point is that what was the trigger for the stock to fall so much? That the management has been very aggressive. That, okay, we will be expanding 150 branches in next 12 months. Then next day they have to come out and give a statement that, okay, we will stagger it over 24 months. Even I don't take that as a serious this thing. So what my point is that, yes, there is sometimes many big overreaction to all these things. But yes, I find value in the stock, and that's what I said, that I am looking only for a valuation of 108, which I don't think that it is looking very stretched or very far-fetched. Yeah.
Fair. Actually, why don't we invite Mr. BP Singh into this conversation of Pramerica. Good morning, Mr. Singh. Before I come to your overall view on earnings, how would you approach the financial space?
Hi, good morning. Well, as far as financial space is concerned, there are some good news and there are some difficult news. Like, for example, if you see the manner in which NPAs are now panning out, the infrastructure NPA, the electricity, that is the SEB NPAs, etc., are now being taken care of, is actually a good news for the banking system. But the competition, and particularly with the technological competition which is coming, is going to have an impact. Now we have a payment bank, we have a small bank, we have the banks with the small size, and we have the larger bank. And plus we have all the technological reach at this point in time. In our opinion, if we continue to move ahead like this, and which naturally is going to be the normal course, the cost of funds for banking system, particularly from the CASA, is actually going to rise, and that's where the real competition will start. And those who manage to actually have a larger share of that are the ones who are going to be the leaders, and the rest needs to consolidate. And in our opinion, when the consolidation takes place, the one should be always with the one who acquires rather the one who gets acquired, because the one who gets acquired, the equity shareholders always end up losing value, and that's where we have been actually focusing on the large size banks, both in the private sector as well as the PSU. In fact, in our opinion, now the PSU banks are actually getting some inherent advantage simply because of the kind of brand image they have. So probably they will be able to handle this particular situation slightly better in comparison to the private sector banks, who have been very well organized and very well handled in this context. But overall, in our opinion, this is a fantastic news for the country, because the cost of the capital is coming down, and so this will increase our competitiveness.
Okay, fair enough. Well, Siddarth Bhamre of Angel Broking is also with us to tell us how to approach the index itself this morning. Siddarth, what is the strategy on the Nifty?
Good morning, Sonia.
Morning.
So last week we have been mentioning that how the momentum in market is fizzling out, and we are not seeing huge liquidity which is pouring in, and hence there was no confidence of going long in this market. But at the same time, data was not pointing out to go short as well. Now in last 2-3 sessions, what we have observed that the momentum is now increasing towards downside, though I can't say momentum right now, but we have seen some correction. But instead of seeing selling from FIs in cash market segment, or probably some index future shorts, to our surprise, these guys have increased their buying in cash market segment. They have in last 2 trading sessions covered significant amount of their index short positions. Now this is interesting. This is beyond what we had thought, that probably at 8380 8400 resistance, which is still there in place, liquidity would start drying up. But instead of that, we are seeing increase in liquidity. This clearly suggests that let's not go against liquidity, even if there is some correction which is being seen in market. I think 8200 remains as a strong support for market, at least for this series. Initially, we have seen a lot of put buying by FIs in this strike, 8200 strike. But off late, as we moved above this level, we have seen that as implied volatility also corrected from 18 levels to almost 12.5, 13, FIs have been significant seller in 8200 put option. So for time being, this is a support. We are not seeing market significantly down below this level in this series, and hence, even because of this 2-3 days correction, we won't suggest to go short in Nifty as of now.
Fair point, Siddarth. Let me come to your stocks itself. You're selling the big boy, HDFC. Take us through your strategy.
Lata, if you look at yesterday's stock future volume, they have gone up by 57%, whereas overall volume has not gone up by more than 18%. Index futures volume has gone up by just 1%. So I was just going through data that where actually the stock futures volumes have been very high, and to our surprise, stocks which are favorite of FIs, HDFC Limited and HDFC Bank, have seen huge surge in volumes, stock futures volume yesterday. Also, if I look at the data, what we are seeing that there were not very much long positions which got created in HDFC Limited when it was moving up. I think results are not that great, and technically also, if I see that yesterday's pattern is negative for the counter. So taking all these factors into consideration, where stock has corrected with huge volumes, though there have been not much of short positions which got built up in future segment, because I feel it is long unwinding plus formation of short positions. That's the reason you are not seeing change in open interest. Not very aggressive short positions, but I feel this stock can correct a little bit. Go short with a target and stop loss mentioned on your screen.
All right. Actually, Mr. Tulsian, I wanted your view as well. HDFC took quite a knock when the numbers came in. I think it lost about 25 rupees when the number. How did you read the numbers?
See, numbers are definitely a bit disappointed, but actually if you really see the pattern, Lata, this stock has, I've really seen this moving in this last maybe 3 or 4 months. The moment it reaches to a level of 1350, you get to see the profit booking and moving in a range of about maybe 1250 to 1350. I don't think that one should really be too fussy for these results, on a very, because we take a very micro view, because even the estimates can go wrong. But but I'm not saying that, but these are more the technical factors. And always HDFC, if you see the last 4 days of expiry, either it will go up or it is used as an index management tool because it has a very high weightage. So whenever if it is ruling at about maybe 1260, 1270, irrespective of any results, you will see the stock moving up. But when it is moving at the upper end of 1300 plus, then you will start seeing the profit booking. So maybe as an investor, one can take a call always on the dips. But if you are a trader, then you need to wait for the price to fall again, maybe to 1270 for the next series. Yeah.
All right, well, that's the word on HDFC. But today we have some big numbers coming in from the likes of Lupin and Maruti. In fact, Lupin has been the biggest gainer this year. It's up 46% year to date. Mr. Singh, I wanted your thoughts on how to approach, some of the big players in the pharmaceutical space, because for Lupin particularly, the expectations are quite subdued this quarter. The growth has been lackluster for the company, but nevertheless, the stock keeps defying gravity. How do you approach this space now?
See, as far as the big pharma companies are concerned, we shouldn't be analyzing them quarter by quarter. What one needs to look at the kind of ANDA approvals which are coming. And without getting into the specific names, I can point out that the top 5 to 6 companies are actually getting decent amount of ANDA approvals particularly in the last 6 months. Now, these ANDAs, they are obviously from time specific. They come from one time to another, and in that particular time frame, they actually add to your top line as well as to the bottom line. So when one tries to analyze these companies quarter by quarter basis, invariably one tends to miss it. So we do not look into these companies on the quarter basis, but when we start looking yearly basis on the ANDA approvals, the top 5 to 6 companies are doing extremely well, and that's the reason why you see the kind of valuation which you are seeing, because we will definitely see positive earnings surprises on most of these companies.
Okay, generally, what is your takeaway from the earnings season so far, Mr. Singh, especially because yesterday some of the consumer durable numbers disappointed?
Yes, as we have been pointing out in the past, what we are seeing that rural economy had slowed down because there was decent amount of subsidy withdrawal and the black money withdrawal which was taking place. The urban growth is not commensurate enough to actually for what the loss or decline we are witnessing in the rural economy. The second thing, the onlines actually had a decent amount of impact in terms of the profitability and also the kind of the price growth which the players are getting. In fact, some of the places where we have visited on the retail outlets, we are seeing the footfalls have fallen because the consumers are actually picking more from the online, where they are picking at 10 to 20% lower prices. The second trend which we have witnessed, so that's the impact on the consumer. The second trend which we have witnessed is the impact of the monsoon. Roughly about 30% of the Indian geography, if you see, particularly on the western side of the country, you find that the monsoon was not good, and which had a much more serious impact, both in terms of the consumer as well as the other companies were particularly related to agriculture, etc. And the third set of numbers where we have seen disappointment is wherever the exposure was to the non-dollar currency, because that's where the rupee appreciation has actually had an impact. So these three segments where the disappointment is clearly visible. Rest all, if you have exposure to dollar, you have the exposure to the rest of the economy, the capex, the capital goods sector, etc. The results are coming decently well. The non-performing assets, in our opinion, the concern which most of us had in the recent past is now no more there. The only concern which we still continue to see on account of the steel and some of the commodity companies.
Okay, let's get a couple of more trading ideas out of the way then. Shubham, you told us about your sell call on Just Dial. You also have a sell on L&T this morning?
Yes, so if you look at the overall sectoral behavior, we believe that in the near term there should be underperformance coming in from there, and especially L&T, if you see, it broke down from a upward sloping channel in the month of September, and since then we have seen that the stock has been consolidating. So roughly around 1600 is what we see the stock topping out, and it has already witnessed a reversal from there. So we expect the recent swing low which was formed around 1400 to get retested, so that is the target that we are looking at in the short term, and a stop loss for this sell call can be kept at 1580.
Okay, actually let's get you some more trading ideas from our segment Super 6.
My first pick is Amar Raja Batteries, that is a sell call. The stock broke the neckline of head and shoulder pattern yesterday, so we may see further downside. It can test 950 or can go short at current levels. Keep a stop loss above 1000 rupees.
I have a sell call on ITC. ITC has reflected near-term weakness by giving a downward key reversal on the daily chart. The mechanical indicators are supporting the move, have signaled a sell, and the stock has posted a lower top, lower bottom on the intraday charts, indicating its intention to depreciate further from here. One can sell ITC at its closing of around 357, the stop loss of 360 and a target of 351.
My first recommendation today is buy on Kaveri Seeds. It's a relatively new entrant in the F&O space, and it didn't have a very smooth ride so far. However, for a very short-term trade, I would recommend going long for target price of 535, keeping the stop loss at 505.
My second pick is CEAT. Yesterday stock broke the support of 1200 and gave a confirmation of lower tops and lower bottoms on the daily chart. So we may see further downside. It can test 1100, so one can go short with the stop loss of 1200.
I have a buy call on Wokhard. Wokhard has reflected near-term strength by posting a fresh 1.5-month high. It has also given a mini breakout on the daily chart with significantly higher volume. Mechanical indicators on the intraday charts have signaled a buy are supporting the move, indicating the stock's intention to appreciate further from here. One can buy Wokhard at its closing of around 1615, stop loss of 1605 and a target of 1635.
My second recommendation today is buy on Wokhard Pharma. The stock has been consolidating in a narrow range for past few days. It's trading above its majority of its averages. So it indicates that going ahead, the stock may even catapult or maybe climb to levels of 1750 and above. For a short-term trade, I would recommend going long for target price of 1655, keeping the stop loss at 1590.
Express headlines of the hour. Brought to you by Berger Express Painting, the faster, cleaner and better way to paint your home.
Welcome back. We're just about 3 minutes to the pre-opening rates. Let's take one look at what's happening with the SGX Nifty. The indication is that we could be headed for a slightly choppy start. Remember, yesterday was a slightly weak day as well, and many of the Asian markets this morning are indicating that we could see red on our screen too. But we've been in conversation with a lot of guests this morning to tell us how to approach the markets. Mr. Tulsian, all eyes will be on the Indigo IPO that opens today. There are a lot of mixed views coming in. On one hand, the track record of the company in terms of revenues and financials has been good, but on the other hand, there are some corporate governance issues that continue to nag the street.
See, Sonia, apart from that, in fact, there are financials, the mockery of the financials norms also. If you really see first the negative net worth, how can a negative net worth have a cash and bank balances, which they have been proudly saying that we have a cash and, restricted, the cash and cash equivalent of about 3,700 crore. If you really see that 3,100 crore has gone largely for the restricted cash, they are only having cash balance of 500 crore. How that has been generated? They have a consistently current liability of 3,200 crore, and that's very actually bad. If you take the current ratio, it is less than 1. Number one. Number two, if you see the bonus issues which they've issued, the entire capital redemption reserve, they've not left even 1 rupee to the extent of 155 crore. Similar amount from general reserve, 155 crore has been used for capitalization, leaving just 20%. And then dividend, we all know that they have taken a hefty dividend of 1000 crore plus. But what my point is that they have been saying that in FY12 we have not distributed the dividend. How can they have done that? Because in FY12 there was a dip of 90% on the PBT over FY11. Yes. Similarly, in FY14 there has been a dip of 50% on the PBT over FY13. So what my point is that the FY15 and first 3 months of FY16 are all robust or very good thanks to the crude. Why there has been dip in FY12 to the extent of 90%? Because the dollar rupee has moved up from 45 to 56. So they are very vulnerable to the even from the because of the operating leases of the aircraft and all that, the exchange fluctuations and the crude. If you recall, just to give you an example, quickly to summarize, when Jet went public, they had the similar this thing. They had a market share of 42% at that time. Yeah. Today, Indigo has 37%. At that time, Jet was saying that we have a young aircraft of 4 year plus. Indigo says that we have a young aircraft of sub 4 years, maybe 3.7 years. They say that our operating per day flight is about 11 hours per day. Jet at that time had 10 hours per day, 9.8. At that time, Jet was a profit-making company. But you see the fate, 1100 rupees IPO came 10 years back, today ruling at 450. Yeah. So even if I don't take that all this into consideration, that okay, aviations have never given money, we are all thanks to the crude. As long as the crude remains low, they will keep enjoying the party. But the explanation on which the management have been continuously harping upon, that we have placed the order of 430 with Airbus, and that has restricted the entry, or that has created an entry barrier that no other person will be able to procure the aircraft. I don't prepare to buy that argument that okay, and then what will happen, because they have us every 6 years they take out, they remove the aircraft. On a peak they will be having 330 aircrafts. But if you really see the airport additions, they have a presence only in 35 airports out of 53. Every year from 2011 to 2015 they have only added 2 airports. That means they are increasing the aircraft on the same route. Bombay, Bangalore, they will make it 17 flights per day. Bangalore, Delhi, they will make it 18 flights per day. But the moment they go on the new airports, eventually when they will be covering 53 airports pan India, I don't think that they will be able to have that kind of profitability.
So
no, I'm not actually looking to the kind of move initiated by them on the, as I say, current assets, current liability, negative net worth, dividend payment, no consistency. I'm not convinced with this.
Okay, so the market's just given a pre-opening rate which is expectedly in the red, but still very wayward rates. But both indices are in the red, marginally though, and to that extent it's not as bad as the Asian markets prepared us. It's just a marginal red tick at this point in time. Of course, pre-opening rates, and the rupee is opened practically flat, closed at 64.96 yesterday, at 64.98 is the opening rate. So nothing much to speak in terms of cues given by the currency market. Let's get some more strategies going. Shubham, we have Ashok Leyland also as a sell from you.
Yes, so if you look at the development there, we expect consolidation to happen, and the range that we see is quite large. So if you look at the past 2 days development, the uptrend that was there intact in Ashok Leyland seems to come to an end, and we expect that within this overall broad pattern, which has a support at around 80 and a resistance at around 98, so that should remain intact, and there is a high probability of a mean reversion happening on the downside. So this is the reason we are recommending a short there for a target of 82, which is marginally above the important support of 80, and a stop loss for the same can be kept above the swing high, which is at 98.
Okay, before we let you go, Shubham, any thoughts on any of the individual banks? You told us about your Bank Nifty call, but yesterday we saw sharp cuts in Yes Bank and Axis. Anything you would play?
Yes, I think Yes Bank is placed quite well for a selling opportunity here, because if you look at the movement there, 780 was the level where it consolidated for a very long time, and recently it has retested that level, and yesterday we did see a pullback happening there. So I expect that on a short-term scale, 690 is what we can look for. So that's purely a trading call that we see on Yes Bank, and a stop loss can be kept at 770 for this. And I think some of the more banks, could be some of the mid-cap names like Allahabad Bank and Andhra Bank.
All right, Shubham, you have a good day. Thanks for giving us all of those trading ideas. Well, the pre-opening rates have settled mildly in the red, down about 0.2%. And some of these commodity stocks like Vedanta, Tata Steel are in the red this morning. NTPC, Coal India are also down about 1% or so. Lupin ahead of its numbers is slightly soft. Remember, it's expected to be a lackluster quarter for the company, although it has been a great year as far as the stock price is concerned. On the upside, Maruti ahead of its numbers is looking quite good. But talking about trading ideas, Siddarth, you have a couple of sell calls as well. You have a sell on Reliance. What is your target price on the stock?
First of all, the days of detailed insight on fundamental research is back. Welcome, Mr. Tulsian, back. And on Reliance, I would say that post results, we have seen that stock gave that gap up opening. And last Tuesday we were talking, we were saying that probably the topmost thing which we would see in this counter would be probably 980,000 would be very difficult to cross, because we believe that that GRMs have peaked out, crude oil price is not going up anymore. What we have observed from trading perspective is that now we are seeing formation of short positions. So this gap which got created because of good quarterly numbers, I think that gap would be filled, and that's the reason we are saying we are not very aggressively suggesting short, and we don't have very aggressive price target also, but purely from shorter term perspective, I think this stock has potential to go to 910, 905 levels. So one can fix stop loss somewhere around 971 and go short in Reliance.
Okay, there's some details coming in on Bharat Forge. The corporate reorganization of the European subsidiaries of the company has been intimated to the exchanges, but this will not impact the day-to-day operations of the company. That's what Bharat Forge says in their press release, and they say that all the transactions are within the Bharat Forge group itself and at book value. So it's just a corporate reorganization of the European subsidiaries, but it won't have any impact on the day-to-day operations of the company.
Fair enough. Mr. Singh, I wanted your view on the entire earnings picture so far. After looking at that, would you alter your sectoral preferences or your sectoral allocation of money?
Not really. We were actually very positive on the entire investment growth, that is the capex which is taking place in the economy, and that's where we have been carrying our overweight position, and we are seeing a very comfortable numbers coming from those sectors. And the sectors where we were actually carrying underweight position, particularly the consumers in the market, and that's where we are seeing a little bit of disappointment. So we are feeling a little bit vindicated, and so we continue to stick to the position what we had in the portfolio this time.
Okay. Mr. Tulsian, another stock that you've picked out for the long-term investor is Good Luck Steel Tubes. That's very interesting. They have big clients like BMW, Toyota, Audi, etc. But what's the big trigger there?
See, Sonia, generally people think that this is again a steel company, but in fact they are steel users, and all along what they have been doing, that they have been making that conventional things, pipes, tubes, cold rolled steel or metal, sheet metal products and all that for automobiles. But if you really see, they have migrated to the high value engineering, that is solar, infrastructure, transmission, electric and power and telecom transmission towers. They have increased their significant presence, and that is what is revealing or seen in their first half numbers also. I'm not going by the Q2 numbers. In fact, there has been gradual increase in their operating profit margin. The operating profit margin, which was at 660 basis point for whole of FY15, has risen to 9% because of that. Because their earlier product mix was 60-40, 60 for that low margin products, as I said, pipes, tubes, sheet metal products, but now they have reduced it to 48-52. That is 52 for the low value products and 48 for high value products. And ultimately they intend to raise it to the 75% over the next 3 years, for which they are creating a new capacity also. They have a capacity of 2 lakh ton at present, taking all this into account, whether you talk of the transmission tower, and they have been big focus on power and telecom transmission tower. They have been very aggressive in that, and that is increasing their margin. So taking all this into consideration, I think that the EPS for FY16 is likely to be 20 rupees, and so it is ruling at a P multiple of 5. Promoters are IIT technocrats and all that. They have been consistently showing this performance. 75% was the dividend for FY15 on face value of 2 rupees. So taking all this into account, I think the stock seems to have bottomed out, and the raw material reduction in the steel prices, HR coil, is giving them a big advantage in the form of making all this forging, pipes, and as I said of this, even they are going into the solar power, solar power panel making, there for which they are setting up a new plant. Their ultimate focus will be on infra, automobile, casting, forgings, and this solar panel. So I think overall the stock looks good, but still one can expect a price of about 125 in next 6 months also.
Okay. Finally, Mr. Singh, what's your view of valuations of the market itself? We have come a distance from that 7,500 levels to about 8,300 levels. Is there a resistance at these levels? Would you be a buyer net?
Yes, we would be a buyer, because not only the numbers are okay, but they seems to be improving. But more importantly, if we look from the global point of view, the liquidity flow into the global funds, and particularly the emerging market and the regional funds, have now quite robust, and we expect the FII flow in India to remain strong at least for the next 3 months, which is quite clearly visible. The other thing what we are seeing is that the...
All right. I think we
there's
have
some issue with that, link. But just in pre-opening, a couple of stocks that do deserve mention. One of them is Hitachi Home, which is down almost 7% ahead of the market opening. Big loss, EBITDA loss of almost 5 crores is what the company has reported. So that stock in pre-opening is under pressure. And Blue Star as well as the other one that's seen a loss of around 6 crores this time around. Blue Star is down almost about 7.5%. So a lot of earnings reactions is what you're seeing, and the market itself is down about 0.4%.
Yeah, I guess it's very clear that there has been a commodity pullback globally. I mean, whether you see it in crude or in the metal market, so that's having its impact on the Indian markets as well. But beyond that, there isn't a very big pullback. Axis, for one, is continuing with its weakness, but we will have to see whether it will persist after the markets open. We have, I think, some more trading strategies for you. Let's get you our bullseye presentation. This week, Sharmila Joshi, Kiran Jadhav, and CA Rudramurthy are battling it out for the strongest portfolio. Let's hear out their picks for today.
Buy IGL with a target of 515 and a stop loss at 500. Buy Sun Pharma Advance with a target of 410 and a stop loss at 396. Buy LIC Housing Finance with a target of 500 and a stop loss at 484. Buy Godrej Consumer with a target of 1300 and a stop loss at 1274.
My first buy call is buy Wonderlaw for a target of 330 with a stop loss of 304. My second call for the day is buy Nilkamal for a target of 1090 with a stop loss of 1015. My third call for the day is buy BHEL for a target of 225 with a stop loss of 216. My fourth and final call for the day is sell GMR Infra for a target of 13 rupees with a stop loss of 13 rupees 45 paise.
The first stock for the day is Spark, which is Sun Pharma Advance. The stop loss for the trade would be 390 and target would be 417. The second stock for the day would be Suzlon, where I recommend a buy and with a stop loss of 23.20 and a target of 25.50. The third stock for the day would be Dish TV, where my stop loss would be 107 rupees 80 paise and a target of 116 rupees.
And Kiran Jadhav has a buy on Ester Industry, Ester Ind, with a stop loss at 61 and a target of 70 rupees per share. So that's another stock that you can look at. But in pre-opening, as I mentioned, there are many stocks that are reacting to their earnings, and top of mind is Hitachi Home. That stock is down almost 8% after reporting what was a very weak set of numbers. Varinder is here to give us more details on all of that. Varinder.
Well, clearly, it is a shock to some of the people who have been tracking these white goods segment companies, and for Hitachi Home, the stock which actually moved from 400 to 1400, 1500 in last 1 year, the company came up with an EBITDA loss, disappointed on all parameters. They had an impressive FY15 because of which the stock was moving up. Look at that, total income was down 1.5%, year on year basis. But if you compare quarter on quarter, last quarter, they did a sales of 710 crores. and from that it dipped to 251 crores. There was an EBITDA loss of 5 crores compared to a profit of 16 crores, a net loss of 11 crores compared to a profit of 9 crores. Now, why sudden change happened? Because of operating expenses as a percentage of sales, they went up by nearly 7.5%. There was higher depreciation, there was lower other income. Also importantly, there was a lower realization on back of excess inventory build up which was happening in the system, and that is one of the reasons why the numbers are very poor. If you just track this company in the last 6 quarters, we always have seen that the quarter 1 is the strongest for the company, followed by quarter 4. So in the last 5 or 6 quarters, quarter 2 has been a very steady, has been a quarter which is the weakest among the 4, but we have never seen an EBITDA loss reported by a company or a net loss reported by the company. This company has a market cap of 4,000 crore. Last year it made a profit of 80 crores. So it's trading very expensive. It's trading around 37 times on FY16 earnings. So there is no room for error the way it has happened. So I'll be watching out for not only Hitachi, Blue Star, Whirlpool, Voltas, all of them, after we have seen disappointing earnings from Hitachi and also from Blue Star. I think Blue Star is also down 7% in the morning today. So keep an eye on Voltas as well. That will be important.
All right. Yeah, we discussed those stocks with Mr. Tulsian as well. Thank you very much, Varinder, for joining us with those strategies. Let's also quickly recap Shubham Agarwal's stocks for you today. He has 3 sell calls actually, starting with L&T, where he sees a target of 1400 and he places the stop loss at 1580. As well, sell on Ashok Leyland, target 82, stop loss 98. And the other short call is on Just Dial, where he recommends a target of 910 rupees, stop loss at 1042. His only buy is on Bosch. That's a target of 24,000 and a stop loss of 20,200. So, well, that's how things are panning out, and that's a bunch of advice from you. Some of them long-standing investment advice and a bunch of trading advice that's come your way. And we get ready for the market opening. A mild red tick is what we seem to be in for at this point in time. Well, it's 1/3% lower as the pre-market indicated for the Nifty. It's about 8231. So 8250 has been taken in the downside with ease. That is largely because of the commodity players and Lupin. That's the other stock that's falling. But otherwise, it's Vedanta that's down 1.6. Lupin, as I told you, 1.5 down. ONGC 1.5 down. One would have expected that given the commodity prices, but HDFC is getting punished. That's down 1.5%. Perhaps it's a hard punishment. In HDFC, the amount of individual loan growth has not changed. It is only that the amount of loans transferred to HDFC Bank has increased, and so the NII is weak. Of course, their corporate loan book did not grow very well, and that also accounted for a poor NII. But HDFC is getting punished 1.7%. It has, of course, expiry week pressures, which Anuj will explain. Among the other stocks, the drug stock Cipla as well has taken a 1% downtick. Idea continues to reel after its numbers, 0.8 down. Kane, again commodity stock, taking 0.7 knock. Axis Bank, ahead of its numbers, which most analysts expect will be good, is actually down 0.6. So it continues with the downtrend that Axis saw late yesterday. The last 1 hour was very cruel to Axis, and that downtrend continues. SBI is down 0.6. So basically, some of the banking stocks are genuinely dragging. Kotak Mahindra, most of the Yes Bank, all of them continue in the red. What's in the green? Maruti, ahead of its number, actually got a thumbs up from the market, 0.9 up. Asian Paints, the correction appears to be petering out. Now it's or at least a short covering, 0.5% up. Ambuja up 0.5%, Wipro up about 1/3%. L&T up, Tata Motors up, Dr. Reddy's up, all marginally, as is TCS, BHEL, Bosch, all of them marginally up, 0.2, 0.3%. That's the story in the big caps. No big losers and gainers, but overall the index is down 1/3%. Mid caps a little better.
Well, it's a soft opening for the mid-cap, so it's down about 0.2%. The advanced decline ratio is weak in favor of decline, so not a good opening for the markets. The stock of the day in the mid-cap space is Hitachi Home. It's down 10% now, and the volumes are also picking up in the early moments of trade. Remember, this stock has given you big returns this year. It's still up 50% for the year, so there's some money being taken off the table as the company has announced an operational loss this quarter. Blue Star is not far behind. That stock as well is down almost 5%. Post a disappointing set of numbers. Navneet Education is giving them company, disappointing numbers over there. In fact, revenues are down 20%, profits are down 12%. So that stock is reeling under pressure. Advanta as well, you can add that to the list of disappointing numbers. Revenues down 20%, the margins have fallen, and that stock is in the red. On the upside, Eros International is seeing a good rebound this morning after that big 20% fall yesterday. Eros International is now up almost about 4%. Inox Wind reported a good set of numbers, so that stock continues to see some traction. Inox Wind up 2.5%. Nestle, the manufacturing of Maggi has been resumed, so Nestle is seeing some positive momentum there, up 1.5%. State Bank of Mysore, where the profits went up almost 30%, that stock too is in the green. For ENIL, it was a steady quarter, so ENIL is in the green as well. And some more result reactions. Aptech, the profits have halved this time around and the income has fallen. So Aptech is down 4.5%, and Man Infra has reported a net loss of 72 lakhs. So Man Infra too is trading in the red. But it's a weak opening for the mid caps and for the frontliners, Lata.
Well, absolutely a weak, but not it's not paralyzingly weak opening. But your thoughts, Anuj? 8250 taken.
Yeah, so 8200 is the important mark now. The sense you get is, Lata, at 8200 there should be some buying. This is not a market which is going to break down in a hurry, purely on the basis of technicals and the kind of buying that it has seen over the last many days. But one thing which is clear now is that 8300 is a tougher resistance than we initially thought, and it's going to require some doing before that is taken out. At least for this expiry, the range is pretty simple, 8200 to 8300, unless one of them is conclusively broken, which at this point in time looks highly unlikely. And as you pointed out, stocks like HDFC, while there's earnings impact, there's also expiry view. You normally see HDFC move in the direction in which the market moves in expiry week. So not surprised that HDFC is the one which has dragged the market the most.
2.3 down at this point in time. Well, final question to you, Siddarth. You and Anuj have been maintaining that 8,200 will be a fairly decent support level for the market. So would you be a buyer in stocks like Asian Paints, which seem to be turning the corner, or Maruti? Any long calls after you see the market opening?
Yeah, 8200 would be strong support, at least for this expiry. I don't know about the November series, but then the names which you took, we are not comfortable there. What we are liking for going long is some of the stocks in cement space, and in fact I've given a trade on ACC as well. This stock has been consolidating in 200 points range since May, and then in last 3 months range has got narrowed down to 70-80 points. We are seeing signs of formation of fresh long positions in ACC, and technically also stock is looking that it may give you a breakout. So I am expecting this counter to do well. Not very aggressive target prices, but I'm expecting 1470 in the counter. Fix the stop somewhere around 1349 and go long. The other stock idea which we have is more on the short side. Despite crude oil prices falling, we are seeing that oil marketing companies are showing weakness, and especially the low beta among the three names IOC. There we have seen fresh formation of short positions. So there I am expecting, despite fall in crude oil prices, this is kind of contra call to the correlation. I'm expecting counter to go down probably till 369 odd levels. Fix the stop somewhere around 411 and go short over here.
Alright, Siddarth, thank you for all those ideas. You have a good trading day. We'll touch base with you again later. That's the word coming in from Angel Broking. But for the market, just keep your eye out on Lupin.